Dear students of Com Pt.3rd, today we'll discuss about the lecture Income from Other Sources. Students, when we talk about the income from other sources, we consider any income which is not chargeable to tax under any head of income and which is not to be excluded from the total income shall be chargeable to tax as residual income under the head income from other sources. Very important for us to understand this. When we talk about the basis of charges under the head income from other sources, we take into consideration the Income Tax Act and Section 56. Income chargeable to tax under the head income from other sources shall include the following. Number 1, very important, dividends. Number 2, income by way of winning from lotteries, crossword puzzles, races, including horse races, card games, gambling, betting, of any form of nature whatsoever. Also, any sum received by an employer from the employees as contribution towards Provident Fund, ESI, if sum is not deposited in the relevant fund and it is not taxable under the head profit and gains from business and profession. Number 4, interest on securities if not taxable under the head profit and gains of business or profession. Number 5, income from machinery, plant and furniture belonging to the taxpayer and let on hire, very important, and let on hire if income is not chargeable to tax under the head profit on gains of the business and profession. Number 6 is the composite rental income from letting of plant, machinery or furniture with buildings where such letting is inseparable and such income is not taxable under the head profit and gains of business and profession. Also, dear students, any sum received from the insurance policy including bonus, if not taxable under the head profit and gains of the business or profession or under the head salaries, that is also then the income treated as income from other sources. In the following cases, any sum of the money or property received by an individual or undivided family from any person except from relatives or the members of the Hindu undivided family or in given circumstances shall be taxed under the head income from other sources, and we have certain provisions regarding it, and the provisions are 5 in nature. I will explain one by one. Number 1, if any sum is received without consideration in excess of rupees 50,000 during the previous year, the whole amount shall be chargeable to tax. Students, please note this. Secondly, if any immovable property is received without consideration and the stamp duty value exceeds rupees 50,000, the stamp duty and value of such property shall be chargeable to tax. Third, if any immovable property is received for consideration which is less than the stamp duty value of the property by higher the following amount, the difference is chargeable to tax. And we have two subdivisions to it. Number one, the amount of rupees 50,000, and number second, the amount equal to 10% of its consideration. Number 4 provision under this is if movable properties is received without consideration and the aggregate fair market value of such properties exceeds rupees 50,000, the whole of the aggregate fair market value of such property shall be charged to tax. Students, last is if any movable property is received for consideration which is less than the aggregate fair market value of the properties by an amount exceeding rupees 50,000, the difference between the aggregate fair market value and the consideration is chargeable to tax. These were the 5 points under the head that if in the cases any sum of money or property received by the individual or Hindu undivided family from any person except from relatives or member of the Hindu undivided family or in given circumstances shall be taxed under the head income from other sources. Now, regarding the shares, if shares is closely held company are received by the firm or another closely held company from other person without consideration for inadequate consideration, the aggregate fair market value of such shares is reduced by the consideration paid, if any, shall be chargeable to tax. Students, we have to note here, nothing should be chargeable to tax if taxable amount doesn't exceed 50,000. This has to be noted down. Also, under point number 10, if a closely held public company receives any consideration for issue of shares which exceeds the fair market value of such shares, the aggregate consideration received for such shares or reduced by its fair market value shall be chargeable to tax. Students, we have to a provision here. This provision is not applicable in the following cases. Number 1, it has the 2 points where the consideration of the issue of shares received by a venture capital undertaking from a venture capital company or a venture capital fund. And the second point in this regard is why the consideration for issue of shares is received by company from class or classes of person as notified by the government. So these are 2 points. The provision is, and these 2 points, under these 2 points, the provision is not applicable in the following cases. Also, any compensation received by a person in connection with the termination of his employment or modification of terms and conditions relating thereto is one of the provisions when we go for the treatment of income from other sources. Interest received on compensation or enhanced compensation. And last, is any sum of money received by as an advance or otherwise in the course of the negotiations for transfer of the capital asset shall be charged to tax under this head, and it has the two provisions. Number one, such sum is forfeited and the negotiation do not result in transfer of such capital. Thank you so much.